So first thing I'm going to do is just get them to introduce themselves, partly because I have spoken to them both, but I think it's much better just to hear from them. So ladies first, Tanya, do you want to tell us a bit about yourself?
I'm a little bit scared of these mics. Is it working? Yeah? Okay, great. So my name's Tanya Poppo. As Sebastian says, I'm the director of Life Synthesis. So I work with the United Nations, I work with international governments to really design new innovations. So I've worked across 15 countries in Asia and also about 5-6 countries in Africa. And it's interesting to talk to Richard about the crossover between the social and economic development.
Alex.
Hi, I'm Alex Buczarski. I'm Chairman International for Marsh & McLennan Companies. I was brought up in Africa and the Middle East, probably lived in 17 countries. My father was an extension officer, so agriculture was always interesting to us. And also just being able to, as an extension officer, just being able to expand services to people who really need them has always sort of been part of the way I was brought up. So I was excited by the fact that after I've got 40 years in insurance. I ran Guy Carpenter for a while. And I'll talk a little bit about how Blue Marble was founded, but I just seem to be in the right business with the right background to try and make a difference, which is what I want to do.
Super. So, well, firstly, congratulations for the news which broke today about Marsh's acquisition of Jardine Lloyd Thompson. $5.6 billion lighter. That's great.
Well, we'll earn it back.
I'm sure you will. So it'd be great to, maybe that's a good place to start, if you don't mind, Tanya. I mean, it'd be great to hear a little bit about, here's Marsh, one of the world's biggest brokers, if not the biggest. And, what drew you, along with many of the other world's largest insurance companies and some of the other brokers, to decide that, you'd set up Blue Marble, which is a kind of a joint venture looking at how to provide microinsurance to some of the poorest people around the world. What got you into that? I mean, that's a strange place.
I guess it started off with our chairman at the time, Brian Dupro, as the International Insurance Society had a meeting in Brazil about 4 years ago. And, you mentioned the statistics of people who have no access to protection from insurance. And he gave a speech in which he basically thought that a single insurance company was not able to do it, and that the industry hadn't done it either. So it required a new approach. So having said that, I was running Guy Carpenter, reporting to him at the time. We had a conversation, and basically he said, "Well, you've got insurance company clients. Go out and recruit some, and figure out how you're gonna move on." So with the help of Joan Lamb-Tennant, who was at the time the chief economist for Guy Carpenter, we began to recruit. So we ended up getting some pretty important people, including companies, including AIG, Zurich, Transatlantic Re, Aspen, Hamilton, Old Mutual, and I'm probably missing a couple, and obviously ourselves, XL Catlin, which is now AXA, so I guess we have joint investors at the moment. And with a view to each putting in some money and using basically collaboration as opposed to competition to try and make a difference. The one thing we agreed upon was it had to be sustainable. So this was not going to be a charitable. It had to make a profit, but it had to make a reasonable profit. And the motives that the insurance companies had were different. One of the companies had a reputational issue, and it was going to be good for them. Another company thought that the efficiency which is required for distribution would actually be very useful for their traditional insurance businesses, and so much would be learnt. Another was simply the demand amongst the people, the millennials that have been joining them, who actually really need a purpose and want to do something good. They thought that this would be exciting. Oftentimes in insurance companies, you'll have an enlightened CEO who likes micro, but it can be the kiss of death if you're invited to go and work for them in that particular space, because they move on, the company stops making money, and micro, sadly, is one of the first places to go. So actually your career can get into a dead end. So having 9 companies, all of them with a robust board, so you have CEOs of these companies are on the board, each making sure that they don't let or be seen to let their own position down. It's actually made for a pretty robust company, and we're excited about the way it's going.
Great, thank you. Tanya, so you've been working with NGOs around the world, but also some corporates, and I know that something that's really kind of important to you is this kind of balance between kind of profitability versus impact. So, you know, we in this room probably are mostly focused around kind of capitalism and trying to make these things, you know, make money at the end of the day. But at the same time, that, you know, how kind of aligned is that with kind of profit versus purpose? Do you see kind of the overlap there as well?
Yeah, I mean, well, if we look recently, we saw Theresa May heading into Africa. How many people saw that Maybot, the terribly embarrassing Maybot?
Why did she do it twice?
I know, exactly. But the truth is, we're looking at new emerging business markets. And in order to be successful in any of these markets, you're going to have to look at the social side. And I think what we have is two sets of people. We have one set of people just interested in the profit, and they don't treat their customers necessarily in a way that they understand if you meet their needs, you have to meet their needs in order for your business to work. And that's what we've seen here with the insurance. And then you have people on the other side who only want to focus on the social, and their social enterprises are not necessarily profitable, and that's not sustainable either. And so to me, the more profit you're making, the more social impact you're having, and the more social impact you're having, the more your business is going to make profit and be sustainable in the long term. I mean, just to throw it back to you, Richard, I know that your company started off with support from the Bill Gates Foundation. Is that not right?
Yeah, so when we first started out in 2002, you know, insurtech wasn't a thing, right? You know, fintech, no one had heard of it. In fact, mobile phone companies weren't really going. And I mean, I remember I was 29, and I remember going to one of my colleagues who was my boss at Benfield Gregg at the time and saying, I want to go and, you know, serve people with insurance in emerging markets. And I remember the look on his face. He thought I was absolutely barking mad. And so this wasn't something that people would invest in back then. So we started off as a not-for-profit. And it wasn't until we got out to a few million clients, and I think it was about 2007, 2008, somewhere around there. So we've been going for a good number of years, funded by people like the Gates Foundation, that our first investors were the IFC, were Pierre Midyar, and also Telenor as a mobile phone company. So that was kind of an interesting kind of departure, and it was a big wrench going from being kind of not-for-profit funded to being kind of funded through equity, you know, from very, very commercial companies. But it was a necessary leap. Yeah, absolutely.
Yeah, I just think what interests me is when people think about social impact, they think that they're not going to make any money. It's just not, you know, non-profit is what we know. And if we can change that, we're actually going to bring people out of poverty much faster, and it's going to be kind of more profitable for everybody involved.
Interesting. So I don't know whether the audience I'm not sure if you've woken up from lunch yet. If you have questions, I'm not sure if we're allowed to do that, but I'd love to, if there are any questions, then we can ask. I've got more questions I'd like to ask of the panel, but I just want to pause there. Has anyone got any questions? Okay. So, Alex, tell us a bit about some of the challenges that you faced, because kind of providing insurance to the mass market, to low and middle income people in these countries isn't easy, right? And I know that Blue Marble's been around now for 5 years, is it?
No, 2.5 years.
2.5 years. So, you know, it's not all been kind of easy, right? I mean, there are challenges in doing this. So do you want to talk a little bit about that?
So obviously you spoke about, number one, keeping your costs down. And I just want to say the model is interesting because with having 9 companies who are shareholders, we basically have access to 250,000 people who want to help.
Wow.
From all sorts of levels of expertise and sources. So we have a small core team, but essentially we work through secondees, which provides these people with an area they want to work in and a unique experience. So from the point of view of design and so on, and the investigation into what's required, there's a lot of free help, which is good. The advantage of having 9 sort of pretty major players is also that you can talk to governments, talk to regulators, talk to potential partners, because I think alliances here are really, really important. With more gravitas than you can if it's just one company alone. So that has also helped us. One of the issues we have, however, is that we'll only agree to a venture or incubating a venture if we have unanimity amongst the board. So that's an interesting one. It's 100% agreement. But then obviously once you've got 100% agreement, you know, things move on. regulation is number one, I guess the number one challenge. If you want to be in India, you know what that's like. That's complicated, and indeed it can be in Uganda and Zimbabwe. Right now we're in Zimbabwe and Uganda on crop cover, and we're entering India on a sort of a life cycle cover, which will include savings, investment, and insurance, and obviously the health and so on that goes around, which is tied to that. Issues, cost of distribution, as you said before. But on the other hand, technology has changed so quickly, and satellite information and sensors in the ground, and basically, in India, everybody has a phone these days, thanks to Reliance. That makes it simpler. But essentially, it's being client-centric. Point of sale is really important. The ability to know at that time, to be able to quote at that time on that particular risk, and understand the client better so that the price that they're paying is the right price. And also it's a signal to them sometimes that maybe they should be in another crop, because when they see the premium go up and they see other alternative premiums that are lower for different types of crops, that actually helps them to become more resilient.
Yeah. It's really interesting that you mentioned that one of the members was interested in kind of reverse engineering some of the learnings. And I know from my own experience that's been true. I mean, some of our investors have turned around to us and said, well, hang on a sec. So if you're selling a product that costs 3p and the cost of distribution out of that is like, less than 1 penny, kind of, could you do that in the EU or in the US? Obviously, the relative sums are increased slightly because just, costs are higher. But I mean, would that open up a whole range of products? And these are digital products. These are digitally sold products. I mean, we don't sell a single product that isn't sold over the mobile or serviced over the mobile. So, we don't have, we've got 63 million clients. I've got 350 staff. So how can you get that kind of model back into into these emerged markets, developed markets?
Well, it requires, number one, a healthy respect of digitalization and the fear of disruption, which should be there. And if a senior management of insurance companies don't feel it, then clearly that's going to be an issue. I think that for instance, a homeowner's policy probably has 50 pages in it. And
whoever reads it, right?
Well, exactly. And then also you can have questions, probably 30 questions.
Right.
Well, you're selling your cover for 2 questions, maybe 3.
Oh, I get no questions.
Or no questions.
No, they just send a text message, that's it.
Or a text message. Yeah. So there is a whole lot of opportunity, but the regulators have to help as well, because much of the rigor is not only self-inflicted by old-fashioned insurance companies, but it's also in many parts of the world part of a tariff or part of a requirement, etc. So the world has to move on.
I remember telling a friend of mine that we were selling insurance in Pakistan. Pakistan's one of our big markets, and we had no exclusions. So the guy kind of like leaned forward and said, "So you can insure an 80-year-old terrorist?" And I'm like, "Yeah, why not?" And I won't tell you some of the claims we paid, but anyway, Tanya. So kind of tell us a bit, because you've worked in these communities, you've been there, and so you've seen these communities and some of the risks that they're wrestling with. So do you have a perspective on that, and where does insurance fit in? Because I'm sure a lot of people would say, hang on a sec, these people are poor, they're struggling to feed their children. Where does insurance fit into that?
Yeah, well, it obviously plays a huge part, because if you're looking at small families or people with businesses, if you think here, obviously there's an infrastructure, there's a network to capture them. But if you're in India, Africa, there's natural disasters, that's it, crop failure, that can be set your family back 5, 10 years at times. So if what you're doing creates a safety net, that's really, really important. So for me, it's what I really like about your model is that you're going to the customer at the point of sale. So particularly you talked about airtime, you use airtime when they purchase it. So the difficulty you'll get with families is getting them to make long-term investments. So if you think even for here, for people, low socioeconomic families, they're not going to invest necessarily in expensive insurance if they have to put food on the table, for example, and particularly if they're struggling to put food on the table. And it's the same in developing countries. But what you did was quite interesting with airtime, because they don't necessarily, they're basically buying airtime. So they're not thinking about making a long-term investment, but it means that it's kind of, they've killed two birds with one stone, basically.
Oh, sure. I mean, we found that actually the most important thing, I think you were saying about distribution being the challenge and cost of distribution, is about really stripping friction out of that process. So if you insist that someone downloads an app to buy your insurance, they're simply not going to do that. Firstly, most of them still have grey screen phones. Those of them that do have smartphones, they're really feature phones, which means that they don't have much storage, they don't have much processing power. So they don't want, if it's a choice between downloading your insurance app or Facebook, you know which one they're going to download, right? They don't have space on their phone for all your apps. And so, you have to kind of fit in with what they're already doing. So, when we run our claims process, we thought about, why don't we develop our own app? And then we realized, why don't we just use WhatsApp? Because that's what everyone already has. And if they don't have it, then they know someone who does, and they can take a photograph of this document and send it to us. And so that was a major breakthrough for us. But as you said, I mean, airtime is something that everyone has. So everyone is a prepaid customer. They're topping up their phone, multiple times a week. And so for them, it's not difficult to then pay for a financial service like insurance if someone is coming kind of once a day and just taking a tiny amount of airtime, so it doesn't inconvenience them. They can still make phone calls, they can still send text messages, and we're just taking it on a daily basis, and sometimes multiple times a day, just nibbling away at that airtime balance. They don't even notice it then, because it then doesn't become a burden to pay their insurance premiums. Yeah, it's been interesting. So, Brian. It'd be great to have Brian. Yeah, it'd be great to have Brian, wouldn't it? Yeah, exactly. So, Alex, where do you see the future for this then? Where as you as a leader in, long-term leader in the insurance industry and in the broking industry, where do you see kind of this developing? Is this something which is going to be a big part of the development of insurance in the future, or where does it fit in for you?
So I think to say that it'll very quickly be larger than the traditional insurance market that we have now, I think would not be right. But I think what it will do is, one, it'll expand. I think geographically, we're all trying to do that. And associations are pretty important. In Colombia, for instance, we're now partnered with Nestle Nespresso to provide insurance to small coffee growers in Colombia. And as other companies hear about what we're doing there, they also have a social agenda, a social good agenda, and also understand that it's good for business. So I think that this is a snowball that will begin to get bigger and bigger. But we can't fail. And one of the big things that sort of concerns me is brand risk. One in the fintech area, there was abuse. Okay, and we heard about how those gouging and so on, and people were paying for stuff that they didn't know that they had, and therefore, weren't claiming if it was an insurance. And I just think that transparency and making sure we do this properly will mean that we'll get the support from governments, the support from partners, and we can make this thing grow. But all I know is that it's going to get bigger, it's going to get faster, and it's going to do more good.
Sure, absolutely. Yeah, I mean, I couldn't agree more. I mean, I don't know, most of you would have heard, I hope, of Zhongyang, which is in China. They went from standstill in 3 years to reach 500 million clients. On the biggest day, which was Singles Day, so a couple of years ago, I think they signed up, was it 100 million customers in a single day? I mean, that should terrify you. And I spent 3 days with their senior management recently, and kind of asked them, well, how the hell did that happen? And and in explaining it, I mean, I think it was just very clear that kind of getting together a kind of insurance company, Ping An, with a kind of social network, with a kind of payment channel, with a social media and e-commerce platform. When you put all those things together, it's really easy to see how you can actually get to these kind of scales really, really quickly. I'm not sure if that's ever going to be replicable anywhere else, because I can't imagine if you want to replicate it somewhere else, then you need those things. You need a parent who's a payment channel. You need an e-commerce site. You need a social media kind of leader. If you put all those things together, then that kind of scale can happen. If you don't have that, like the majority of us, then you have to kind of start from the bottom and work your way back up. It's a big challenge. Tanya, any thoughts about how you see this developing? I know you're coming at this not as an insurance expert, but more in terms of how society is changing in Africa and Asia, and how you see people's needs for these kind of products as they develop and come out of poverty.
Yeah, I mean, when I talk to both sides, business, people purely interested in business and purely interested in the social side, everybody understands these are new emerging markets, and there's a huge population, particularly in Africa, that people are now looking at. But if you're going to produce profitable business, you have to support the public infrastructure. You have to support the social infrastructure. So for me, there's huge opportunities, but it's only going to come from those who have a genuine understanding of the local communities, which you both do. You both have lived in Africa, which I think is one of the reasons that the businesses have worked. I guess the one thing I would say is when I work across the world in innovation, I see lots of people, and they start off telling you, we're starting off with this app, or we're starting off with this algorithm, and this is going to do this. And they have no real background or understanding of the customer or understanding of why it's going to work. So for me, it's about starting off with that understanding, and both of the panelists have talked so much about wanting to make that difference. That is, to me, is what's going to lead to long-term, sustainable, profitable business.
Interesting. So, Alex, you talked a little bit about the regulators and how the regulators play a massive role in this. It can be a pretty dry subject at times, because obviously regulation is necessary, but it can turn a lot of people off, and
And if I start criticizing some countries' regulators, it could be bad news for me too.
Yeah, so. Exactly. Maybe you can't do that in a way that I could. But what are the kind of, I guess, have you seen success stories? Have you seen, let's look at the bright side rather than the kind of the downside. Have you seen countries that have kind of got this right, and that are kind of really helping enable these kind of fintech and insurtech kind of companies get going and get traction?
Well, so I just came back from India last week, and we're trying to persuade the Indian government to allow insurance intermediaries to have more than 49%, and therefore to be able to consolidate the numbers, et cetera, and make the investments that we want to make. And what I found interesting was, as soon as I started talking about Blue Marble, they got excited. Not just the regulators, but also ministers and secretaries, undersecretaries, and so on. So I can't point to, at the moment, where somebody's got it and it's made a huge difference, but I can certainly say that if you're going in with an agenda like that to an enlightened government, that's got to be useful.
Yeah. I think the biggest challenge that we've seen in that space is interesting to hear about India. In many of these markets, I found that it's the intersection between the different regulators which can be the biggest problem. So we haven't actually had any problem with the insurance regulators as such. They've been very, very happy because they're delighted, because normally the regulator's job is to try and protect people, but it's also to try and develop the market. And when you're a regulator and only 3% of your population has insurance, it's kind of difficult to shout from the rooftops. But when Ghana, 10 years ago, when we first started working in Ghana, I think it was 2.5% of the population. Now it's 26% of the population has insurance. And the regulator loves talking to us because, quite frankly, we've made him a hero, right? He's been able to go to his boss at the finance ministry and tell him how wonderful the market is and all the rest of it. So that hasn't been the problem, but where it's been these interplays. So when we've turned around and said we want to start using airtime as a currency to pay for products, the central bank sat up and gone, especially with everything that's going on around blockchains, and said, whoa, hang on a sec, So you don't want to use currency to pay for these products, you're using airtime. And so they've then started to intervene and say, well, why don't you use mobile money? But of course, one of the challenges is that, outside of Kenya, where pretty much everyone seems to use M-Pesa, and that's always the example that people talk about, actually, in many other markets, mobile money really hasn't taken off, So, typically you might find a telco with, say, 50 million subscribers, and then they may have 5 million mobile wallets. But when you actually dig into that number, it's 5 million people that have ever used a mobile wallet, and actually it's only about 250,000 people that make a regular payment. And then when you dig into that even further, you realize that it's only about 50,000 people, and they're pretty much cash in, cash out. They're like human ATM machines. So people aren't using it in the way that people imagine.
No, I agree, Richard, but I think, as you mentioned before, whatever it is, 3.5 billion, 4 billion people who are underserved, I think we have to look for quick wins.
Right.
And so if there's a government or a regulation that makes it very difficult, and there's somewhere easier to go and the need is the same, let's go where we can make a difference quicker. And by that, and then they will begin to see that there'll be pressure from the populations of other places by reference to try and improve the regulatory environment so that this can be done.
Okay, good. So Tanya, you also work with a lot of corporates, I know, and here's a bunch of people who are trying to start up businesses. I mean, corporates can, as Alex has told us, be hugely influential in getting new things off the ground. They've got people, they've got resources, they've got money. Are there corporates that you're talking to that are also interested in finding ways to try and accelerate insurance? Or is that something which they find very alien? Where does it fit into the corporate side of what you're doing as well?
So I don't think that I'm speaking to a corporate that's necessarily interested in insurance or knows much about this sector at all. However, what they are interested and what they are looking for is points to support and invest social good, but where there's huge amounts of profit to be made. And that's where InsurTech is very interesting, because there's, as I say, what corporates want to do is make their brand look good. I'm not saying, there are obviously many of them that genuinely care, but at the same time, if there aren't huge margins to be made, then they won't be interested. And InsurTech is one of the only kind of new sectors right now that has demonstrated there are huge population sizes, there's huge amount of good to be done, but there's huge amounts of profit to be made as well. Okay. So I guess it's up to yourselves to really make the corporates aware of where the opportunities are.
So if there are people sat out there, should they come and nobble you afterwards to?
Yeah, definitely. If they have new ideas. The thing is, and I know that the Bill Gates Foundation has said the same thing, and talking to some of the VCs as well, there's many VCs that are just interested in social good. Corporates have so many departments that are just interested in social good, but you have to be able to demonstrate that you have long-term sustainability, and that's what so many new innovations cannot demonstrate. So for me, it's about ensuring that you have not just a strong business model now, but for the next kind of 5-10 years. And most innovators are focused on the tech, too heavily on the tech, instead of understanding the client, understanding the local customer, and that's particularly important in developing countries where there are huge population sizes, low literacy levels, completely different lifestyle and needs to often the individuals. Most don't have the understanding, and that's where they fall. I think most people think VCs are interested in the technology. The technology is actually out there and very widespread. What's not there are successful business models that have demonstrated that they can survive in the developing countries.
So it's really interesting. I was just thinking as you were talking, and I was thinking about the work we did with the Gates Foundation in the very early days. And in many ways, we wouldn't be here today without them, but it was a complete nightmare. Because they wanted to know at the outset, so here I am, I'm 29 years old, and I'm saying, I'm going to go sell insurance to poor people. So they said, great, we'll give you a bunch of money. Tell us your plan, right? So 5 years from now, we want a 5-year plan that says where you're going to be, what countries you're in, who you're going to be partnering with, how many clients you have in that country, how many clients you have in that country, what will be your revenue per client here and your revenue per client there. And quite frankly, I hadn't got a clue. And so I had to make something up. So I made something up. And within about 6 weeks, there's that saying, isn't there? A plan never survives kind of like the first encounter with the enemy, right? And it's the same with startups. You start something, and within about 6 weeks, you realize that whatever you told your founder, your funders, isn't going to work, and you're going to have to do something different. I think that they were happy with me by the end, but there were certainly periods of time when they were very, very unhappy with me, because what actually came out of that kind of grant and what came out of that involvement between us wasn't anything like I told them it was going to be. And so they were very, very disappointed. And there were certainly periods of time where it was pretty touch and go. And so I certainly wouldn't encourage you, if you plan to do a startup, to start by funding that with philanthropy or through money from corporates, because they do need to know how you're going to use that money. It's not a bad idea once you've got some momentum and you understand perhaps a bit about what are the KPIs that you're going to need to track as a startup if there are certain aspects of your business that you think are more risky that perhaps wouldn't get funded any other way. It's not a bad way to try out some new areas or a new country or a new partnership, but I wouldn't do it from day one. That's just a bit of advice I'll give you for free because I had a lot of sleepless nights over that. So finally from you, Alex, I think we're down to the last few minutes. So you know, what can we expect to see from Blue Marble? What do you see as being, I mean, as you said, there have been a few projects now, one in Africa, one in Latin America on kind of crop insurance and providing people with crop insurance, which then helps them get loans and helps them, you know, against the uncertainties of climate change. Obviously, that's an area that you know, the team can continue to do. There's exciting news about India, and it's going to be great to see where that goes. Where else do you think that there's going to be opportunities for the Blue Marble team and for the participants of that?
Well, certainly in Africa, because of the learnings that we have around the different crops, around dealing with behavioral as well as climatic issues, there'll be expansion there. The India experiment, you know, it's an incubator. I mean, if we get it right, and we may not get it right at the first iteration, but there'll be other iterations, as long as India allows us to act, I think that there's huge possibilities there. Basically, it's you know, working on the experience, our learning that we've had to date, which is 2.5 years, as I said before, and looking for opportunities. I really don't have a plan as to where we will be in 3 years' time from the point of view of geography or product. Certainly, we want to try and have launch two ventures a year. If we do 3 1 year and 1 the next, again, that's just what it is. Mm-hmm. But it requires, as you say, it's a different approach to when we're running our company or putting together, you know, 2 major brokers, etc. That's a different approach.
Yeah. So if there are people in the room who have ideas and projects, they can approach you and have a chat with you.
Absolutely, welcome.
Great. I think we're out of time. Thank you very much for your attention. I hope it's been interesting.